The Minority Market. Episode 34. Conceptual Understanding of Volume and Price. Price is what most people watch. Volume is what most people ignore. This simple imbalance is one of the biggest reasons beginners misunderstand market behavior. Price shows movement, but volume shows participation. Price shows direction, but volume shows conviction. When you understand how these two work together, the market stops looking random and starts revealing intention. Most beginners treat price as the only truth. They focus on candles, patterns, and levels without asking a deeper question. Who is participating in this move and how strongly? A price move without volume is like a car rolling downhill with the engine off. It may move, but it lacks power. A price move supported by strong volume is like an engine accelerating uphill. It shows effort, interest, and commitment from market participants. Volume represents activity. It shows how many shares are being exchanged. Behind every trade is a buyer and a seller. When volume increases, it means more people are involved, more money is flowing, and more decisions are being made. This matters because markets move not just because of price patterns, but because of collective behavior. When price rises with increasing volume, it usually indicates strong demand. Buyers are aggressive. They are willing to pay higher prices. This often supports continuation of the move. When price rises with falling volume, it often signals weak participation. The move may continue briefly, but it lacks strength. This is where many false breakouts occur. The same logic applies to falling markets. When price drops with high volume, it shows strong selling pressure. Fear or distribution may be present. When price falls on low volume, it often means selling pressure is weak. The move may slow or reverse. Most beginners do not observe this relationship. They only react to price. They enter trades based on patterns without checking whether volume supports the move. This creates low-quality decisions and emotional stress. Another important concept is accumulation and distribution. Large players do not buy or sell everything at once. They accumulate positions slowly during sideways markets and distribute during high excitement phases. Volume often reveals these activities. During accumulation, price may move sideways while volume gradually increases. During distribution, price may rise while volume behavior changes subtly, showing reduced demand at higher levels. The minority learns to observe these hidden phases. They understand that sideways markets are not boring. They are preparation zones. What looks quiet on price can be active under the surface. Volume also helps identify exhaustion. When a strong trend shows extremely high volume near the end of a move, it can indicate climax behavior. This does not guarantee a reversal, but it signals emotional participation and potential slowdown. Beginners often enter during these emotional peaks because price looks exciting. The minority becomes cautious during such moments. Another mistake beginners make is treating volume mechanically. They look for spikes without understanding context. A volume spike during a breakout has a different meaning than a volume spike during consolidation. A volume increase near resistance has a different implication than volume increase near support. Context transforms information into insight. You must also understand that volume does not give buy or sell signals by itself. It provides confirmation and warning. It supports analysis, not replaces it. When price and volume move in harmony, probability improves. When they diverge, caution increases. For example, if price makes higher highs but volume makes lower highs, it may indicate weakening momentum. Buyers are less enthusiastic. This does not guarantee reversal, but it tells you energy is fading. The minority respects these subtle signs. Volume also helps filter fake breakouts. Many breakouts fail because they occur with low participation. Price crosses a level, but volume remains weak. This often traps emotional traders who chase the move. When you wait for volume confirmation, you reduce low-quality entries. Another critical aspect is understanding that volume reflects crowd behavior. High volume during panic selling shows fear. High volume during euphoric rallies shows greed. When you learn to read volume emotionally, not just numerically, you start understanding market psychology in real time. The minority also uses volume to manage risk. When volume dries up, liquidity reduces. This increases slippage and unpredictability. Trading during low participation environments carries different risks. Awareness of this protects capital. You should also avoid overcomplicating volume analysis. You do not need advanced indicators to understand basic relationships. Observe whether volume is increasing, decreasing, or staying stable relative to price movement. This simple habit builds powerful intuition over time. Here is a practical mindset exercise. Next time you watch a chart, ask 3 questions. Is price moving with strong participation? Is volume confirming or contradicting the move? What emotional phase does this market appear to be in? Writing these observations builds pattern recognition. Remember that volume does not tell you what will happen. It tells you what is happening now. It shows current behavior, not future certainty. When you accept this, you stop expecting perfect signals and start building realistic expectations. The minority does not try to predict exact tops or bottoms. They observe strength and weakness. They adjust exposure based on participation and momentum. This adaptive approach builds consistency. Over time, as you combine price structure, volume behavior, and risk management, the market becomes less mysterious. You stop reacting emotionally and start responding logically. Understanding volume and price together is not about complexity. It is about awareness. When you develop this awareness, you gain an edge that most beginners ignore. This is why conceptual understanding of volume and price is essential. It transforms charts from random movement into meaningful behavior. It helps you think like the minority, not react like the crowd.